Hello, Critical Point Podcast, weekly update for the New York soft markets. We're going to do sugar, coffee, cocoa, and cotton. It's January 13th and 12:30 p.m. Central Time. Okay, let's take a look at the daily chart of sugar. What a bull market since the April low. Somewhat in line with the economy, somewhat in line with the stock market, and all the virus characteristics, but what a beautiful bull market. Level 1 uptrend, level 2 running correction into a level 1 bottom, actually level 2 bottom, and then on to a level 1, I should say. On up to level 1 top, down to level 2, and it's now moving up into the next level 2 top, and will decline sometime to a level 1 bottom probably in February, and that's kind of in line with what we're seeing with several commodities in the stock market. Now let's zoom in here. And what we think is occurring in sugar is that we've had a level 3, level 3, level 3, and there ought to be at least one more level 3 up move. So I'm appreciative that they rejected yesterday's decline. I think that's a level 3 bottom, so we need to actually pull one of these out here, move this up here like this. And I think it's going to rally into a level 3 top, but the first chance for a level 2 top, and it's going to occur later this month, and then we're going to get some consolidation. Now, if the level 2 high is above a level 1, and it will be, even if it's not higher than this high, the point is it's already gone above it. This is your trend, but it's already been above it. That triggers rules in the models to say demand ought to still get the upper hand going out in March, April, when prices should be nearly as high as this level 2 top or this high, and ideally higher still. So there can still be more bull runs in sugar, okay? Now the problem is we do have the level 2, level 1s due in February as a bottom, so there should be a wave of selling. There should be some backing off of demand at some point. So I would be concerned as a risk management point of view that if it trades below the low of January 11th at 15.40 March sugar futures, maybe we ought to take a chance that it's just not going to raise its head up. It's not going to work very well for us, or it's going to be broken up choppy, and the market really wants to work lower into a level 1 bottom. Okay? In other words, even if it breaks that low, I can't rule out some upswings, but I'd get nervous. I think it's time to get this market back on board. Okay? Now, what would help us with that is if it gets up here over the next 2 or 3 days, continues to rally. If it trades above, okay, the high at 16.33, that helps confirm it's trying to work for that level 2. But again, in just the next few weeks, we're going to start looking for that level 2 top. I question how high sugar will really go, however. So for the moment, I'm only allowing just a little bit higher. I'm allowing for something to go wrong where it's stalling out and bumps its head in this range, that it can't even stay above 16 and eventually goes down. So that's our scenario. Now, we do have an oversold condition trying to turn to a buy signal today in the daily stochastic. We do have mostly rising open interest with rising price, so mostly net new demand, but we did get a sluggish supply here and a little bit, well, we don't have yesterday's open interest yet, so we don't know. Overall, it's been a bullish structure. But like I say, looking out to February, this market should go down. Looking over the next couple of weeks, this market should go up. And that's the best scenario I've got of how the waves of buying and selling come in. What do they need to get done business-wise? Now, I want to take a moment and look at the long-term picture of sugar. And what we've got is this. We're showing the 3-year business cycle highs, and we think that it's a bull market into next year. It may top as soon as early next year, and the highest price could occur this year. Okay, it is long-term overbought, but we think it's going higher anyways. We like the open interest in recent months, showing net new demand, money flowing in, and then look at how this has worked. Okay, the green candle body portion of the candlesticks are suggesting closes above the open. And there's a tremendous series of them. It's also, you can see the closes are above the prior closes. Fantastic trend. Now, it's worrisome that to have that kind of a fantastic trend, we could go through several months of consolidation, trading range, and corrections, and floundering around, okay? But it's taking out recent highs. The trade is dead serious about inflation, dead serious about, you know what? Commodities get beaten up going into a recession, meaning they get thrown off the bus earlier than the rest of the economy. They produce too much, so they kind of do it to themselves, shoot themselves in the foot. And then they have the recession and get beat up some more, but pulling out of a recession, history shows you got that chance to get those commodities up there, okay? And so I think we got the highest rate of inflation coming now in the next 3 years. And then it's going to be a lower rate of inflation going for the rest of the decade. And so the point is, I don't think commodities are going to perform so well later this decade. It's going to be the stock market number one, the economy number one. And part of the reason is we'll produce too much later. We'll shoot ourselves in the foot because we got all these wonderful high prices coming. We still have crop problems coming this year into 2024 for the U.S., primarily for the grains, however, but it could be other crops, and there can be issues around the world at the same time. So, bottom line is, yes, sugar can correct, and for a while, but I think I'm a long-term bull into next year on the sugar market. I still own it down 11-cent area. I'm not managing the risk. I'll manage it when it gets all the way back. I'm willing to give everything back just to ride that out and see this work. Let's move over to coffee. Okay, in the coffee market, level 1 bull, level 2 bear, tremendously bear. Now it's trying to move another level 1 and moved up for level 2. It's zigzagged for running correction into level 2, level 1 bottom. So a sign of strength, I think. But on a very short-term basis, it's a sloppy, fuzzy market. And I'm not convinced we got the fundamentals to be bullish here on the demand side around the world. But the economies are growing. They're getting better. And then I'm not so sure Brazil and Vietnam can really give us that supply crunch, but maybe that's why they're waking up today. I'm already missing something. I don't know. I'm not that pleased with open interest. It's pretty much the same game playing with coffee, but it may be picking up. A little money may be trickling in here and more on the buy side than sell. Last week it was due for a level 3 bottom. We got it. Beautiful evidence. Look at this 1, 2, 3 pattern, meaning the lowest point is number 1. It rebounded and then pulled back, so that resistance is number 2. Pull it back to a higher low for number 3s, and then it rallies and breaks past the number 2. That's also a signal of they ran out of supply right here, couldn't get the job done. They were tired out, exhausted of selling. It's a bottom. It's a bullish signal. Now, I don't really use it analytically, but I'm also aware of traders who don't use it analytically, but they use it as an entry point. They would have been buying today off the breach of that high 3 days ago. Their computers are even programmed to do it. It's not that difficult to program. Daily stochastic moving up, widening spread, suggesting chance of lingering bullish momentum, and it gave us a buy signal right in line with the model of saying should be only a level 3 pullback. In addition, for coffee, it may be level 2, level 1 bottoms as of last week. Therefore, it's rallying into the end of January, if not some of February. I think what we're going to see is a rally now into next week for level 3. We have objectives to near the high of 129 area, okay? But I don't have much else for that. But it could go even higher still because of the larger uptrend when we have objectives as high as mid-130s, 140s, but not enough confidence yet. Hopefully I'll update you in time and come up with some better objectives. Until the violation then of the low 119.20 on January 8th for the March futures, I think it's up and away for coffee, and it should move higher than the high on January 4th, ideally. But we do have to consider that in a few weeks, this market can correct. It can be down in February, and many commodities can be down in February. Even the stock market can be down in February. Now let's take a look at the long-term coffee. So I've given you a risk point if you're bullish, and then we'll have to reevaluate. I've given you some upside objectives, although I haven't put them on the chart here, and we need to qualify them some more and fine-tune them. And I've given you that there's been bullish technical action here now, and I'm giving you the model saying, but the bottoms are in. That's all that really matters, okay? We now are swinging the pendulum the other way. The buyer needs to get more bought, and the seller has already sold enough, feeling more comfortable, so we're trying to tighten up the available supply. We're increasing the available demand, and none of that has to change the needle on the S&Ds. It doesn't have to change the supply demand. Everybody else is watching, and the market will still go up. Available supply and demand are just a smaller increment into that, but they're actually the most important, because that's what people actually have to pay, what they have to get done. It's more about people, and it always overshoots, undershoots the fundamentals. All right, enough on that. Where is my long-term coffee chart? Here we go. Okay, I warned you months ago that, yes, we've been in a 9-year bear market cycle, that it probably bottomed last year. It could still bottom in the first part of this year, so we could see a big hit in coffee. I warned you that I don't think that's the case, and we got a weird sequence when the 9-year is here, a 3-year top occurs, which means it ought to go be bearish in the next year. And if it violated that 9-year, it may be bearish for the rest of the decade. But what I've told you is this is a sequential flip. It's 10% probability of some weird fuzzy things, a whole basket of things that could go on. It's not going to matter, in other words. On the other hand, fortunately, this low as of November was a level 1, so I think what we've got going for us is a chance that this could be a 9-year bottom. After all, it's just a truncated bottom. The market's so tired of going down, the supply just isn't there, okay? It can't get the job done. If so, this is not only a normal strategy, but inside of normal, it's still a bit strange because it means you've got a long-term top just ahead of a long-term bottom. That means it can be bullish for some time. I think it's going to be bullish into 2022, okay? And what I don't know is how much bullish it can be. And we may see a bullish attitude from now to 2024 and multiple crop problems or something. For the moment, I think it's more inflationary trading, and I'm not so sure it's going to do as well as some of the other markets. But something to consider that I could be right on that long-term outlook is violation of 135.45 on your continuous spot prompt contract, okay? That kind of charting. Then I think we can get more bulled up here for coffee. But I'm concerned it's going to be a bull market for a while that could be quite choppy range trade with an upward bias. Not so sure I like any of these markets. They're just plain buy them and forget about them. If they're very small positions for you and you can risk a lot on them, go for it, okay? Maybe the ETFs could help you if you can find some. Any rate, yes, I do think there's some consolidation and maybe a long while before coffee really gets going on this bullish scenario. But indeed, I would watch the September 2020 high for a sign it is working. Okay, quickly, let's move over to the cocoa market. And in the cocoa market, I think it's put a level 3 top in today. It could bounce one last time over the next 2-3 days here, trading days, then down. But I kind of feel like this is a deadline. Let's get this done. If you're going lower, go lower, darn it, okay? And what I'm thinking of is, if it goes lower in the recent level 3 low, it may not bottom then to sometime next week. And there may be more downside than I realize, because I feel as though cocoa should have already been more bullish than this. It's taking too long for the more important level 2 bottom. Okay? So I do think it should rally into near the end of the month, into February, much like many of the commodities and stock market. And I think it should be back down in February into March, like many commodities and stock market, okay? But I'm not convinced what it's doing. What, is it really trying to focus on going down into, March, April, something for a level 1? I don't know. Is it going to forget that it's supposed to rally in this level 1? I don't know. Now, granted, it could take longer, and I think we could add another 2 level 3 rallies here. But I think we only need one more level rally to make that level 2, level 1. So maybe cocoa can do one of these things right here, okay? Just suddenly explode, all right? If it can trade above today's high at 25.38 in the March cocoa on a close, with this oversold condition is trying to turn bullish, I think there's a chance you got to consider we're at least going to get this level 3 rally. And it may go up, down, and another level 3 rally and get into maybe even into early February. So there is time still to wake up here, but it's just bothering me. Why hasn't it already woke up? And I don't know really where we're going fundamentally on this. All right. So not as nice as I would like to see. And I think for the moment you want to give the bears a chance unless it takes out today's high. Now, let's see what the long term is offering us in the cocoa market. Monthly chart, continuous prompt, spot, whatever you want to call it. Energy people like the prompt idea. Everyone else is spot. So, 3-year cycle bull market. Basically, 3-year cycle bear market got a brief 3-year cycle bull market. We may see this kind of fuzzy trading range for a very long time, but there's a 3-year business cycle top due next year, early next year. It can be bullish this year. I think it needs more time consolidating range trading, but I'm wondering, are we starting a wide, choppy, sloppy trading range with an upward bias that eventually someday might even explode for a very nice, robust, but perhaps brief bull market as seen going into early 2018? Evidence of doing this would be trade above the November 20 high at 28.21 for the continuous prompt futures. Until then, I don't want to wait that long. I'd like to think, can we find more evidence here? Yes, we should be buying this and trading this long term. This may be one of those markets you just don't trade it long term. You don't buy it and set on it for many, many months. You use it as just a bullish guideline. There can be more bullish behavior than bearish, and trade it though level 1, level 2, level 3 throughout the year. Probably the better concept. All right, let's wrap this now up with cotton. Beautiful bull market since that April low, and finally the market just says, you know what, we'll conquer this virus, economic depression here, recession. Okay, the world will get back together. And then how about all that money printing, and how about all the inflation? And beautiful level 1 uptrend, then a correction level 2, another level 1, and on and on. So where are we today? The model's saying level 3 bottom as of January 11th. Trend is up probably into next week. The decline today is just level 4 interweek. It ought to be back up by tomorrow or no later than, say, the next day. I think it's going higher in the next week. This is just a little hesitation, a little profit taking. 5-day average may act as support. I think the next upside objectives are 82.62 to 83.51. You can also use the midpoint of that range for yet another objective, or a single price objective if you must. Okay. Now, what else can I tell you? It is short-term overbought. And the point is, starting next week, we got to look for more important level 2 tops. And it should decline by February for level 2 bottom. Very similar to many commodities in the stock market. It's making me wonder, are they just going to sell everything across the board? And is it because mild negative news, fundamentals, surprises, and more of profit taking and technical selling? Or do we have some serious negative information coming here in a few weeks that's going to clobber everything? I don't know. Okay. But for the moment, I think cotton is going higher. All right. Near term, just really short term. And someday it's going to correct. Your risk point are daily lows, 5-day average. And you don't want to sell right at the 5-day average. And then, of course, more importantly is the January 11 low, but I think cotton's moving higher. So now what do we have for the long-term cotton? Okay. We have a fantastic bull market for one thing. Now I'm trying to size this. Sometimes the scaling is a bit crazy here. Now here's the problem. Dating from 2018, this market can top early this year for a 3-year business cycle. And it will not be higher this summer, suggesting it's not going to have a crop problem, or it's too high for a mild crop problem. Or there's some other issues that's going to back this market off for the rest of the year, and eventually we get into harvest pressure. Okay? It's long-term overbought. It could do it. All right? The problem is we dig into that level 1 stuff, and level 2 I just showed on the daily chart. Suggestion, yes, the market could be down in February. It ought to be back up in March and April. It ought to be back up to near the level 2 high coming in the next few weeks. Ideally, it ought to be still higher. So it's suggesting, since the rules state that you cannot have a long-term top unless you have a level 1 top, and quite often level 1 tops can be the high of the year, by the way, but you'll have more than level 1 top per year. Okay? So what it's telling us, if the long-term top's coming, it probably shouldn't come to March or April. But what's the possibility of delaying into summer? It should be very low probability. So the cotton market isn't on board with the grains that we can have a crop problem in cotton, in my opinion. Now, I'm digging deeply here. I'm going against my own model a little bit. I'm trying to find a way to prove the top occurred January or February in line with peak economy, the start of the recession, another great recession or depression, start of the blowout in commodity stocks. Okay, can I prove it? Because it actually meets minimum number of years, but that's just a small component of all the modeling. We got to dig deeper, and it's really not showing me what I want to complete a long-term top. But if we could, this market's going higher into 2022. Now, what's the possibility that we could get 2-3 year business cycles combined? In other words, it just doesn't work for a top now. That's like 10% or less probability. But it could happen in very strange events that just keeps this market bulled up for 3 years. I don't see that coming. But maybe there's something I do not understand with the amount of inflation, money printing, and growth of the economy, which could be fantastic next 4 years. But it seems to me it would have to involve some major crop issues. I don't see that coming. So this is a tricky one because we could be going into a long-term top in cotton. In addition, just price-wise, not looking at any of this modeling stuff, I think cotton should go to $1 to $1.40, frankly, sometime this decade. But I don't know if we have the economics here today to do it. So a tricky situation in that it's been such a robust trend again. Every month, just buy, no stopping. They only stop during the month, okay? Otherwise, they're just buying every month. Incredible, fantastic. It makes me wonder, can't this thing go higher in the summer, you know? So I think the way to do it here is seldom trust long-term stuff anyways. You don't buy commodity set on them for years, in my opinion. Sometimes it works more in the gold, maybe metals, but not in crops, not in livestock. I think it's too difficult, okay? But this is good background information that can warn you of more bullish surprises over the next few years than not for commodities, okay? And specifically for grains, and I don't know why cotton, meaning I may get the $1 to $1.40 later here, but not necessarily this year into next. So a real tricky situation, but I think we've just seen a major long-term bottom last year, and the wild thing is it's the same business cycle for the economy and stock market. Manage your risk, Ralph Naus. Others have a great weekend. Stay safe, stay healthy.